Happy Friday. Welcome to another edition of our Friday update. This week was a first look at inflation data for December. The Consumer Price Index, the CPI, came out a little bit above expectations, but still trending in the right direction. The core CPI, which the Fed is most interested in because it strips out the volatile food and energy sector, actually came in with a 3 handle. What does that mean? It came in at 3.9%. It just feels better to be in the threes than the fours, knowing we're trending to the Fed's 2% target. And if you look at the last 6 months core CPI figures and annualize it, this is something the Fed is looking at. This is now almost right at the Fed's 2% target. Combined with the good CPI data was the producer price index that came out today, the PPI. This measures wholesale inflation. Wholesale prices can be a precursor to a drop in retail prices. Year over year, core PPI figures actually dip below 2% to 1.8%. Hopefully, this will translate to a continued lowering of the CPI. With inflation dropping, the Fed is now looking at lowering the Fed funds rate sometime this year. They're trying hard not to put the economy into a recession, so they may be letting off the gas pedal just a little bit. In the last 2 years, the Fed has raised the Fed funds rate 11 times. I don't even have enough hands to their current level of 5.25 to 5.5%. Now, being in Las Vegas, let's look at the odds of a rate cut in 2024. So Wall Street traders are always trying to anticipate the direction of the market. So here are the current odds. At the Fed's next meeting on March 20th, the odds are 68% chance the Fed will cut rates. Their next meeting is May 1st, coming in at a 94% chance of a rate cut. And then in June 12th, the meeting where the odds stand at 100% chance of a rate cut by the Fed. And that remains throughout the entire year, 100% for the last 4 Fed meetings. So in other words, odds are very good that rates will drop this year, and it's anticipated that there will be at least 0.75% rate cuts to the Fed funds rate this year. The question is, how will this translate to mortgage rates? Mortgage rates should follow suit. Right now, the 30-year fixed rate conventional mortgage is fluctuating around 6.75%, according to the Mortgage News Daily Rate Index. If mortgage rates follow the same pattern, a 0.75% reduction would bring mortgage rates down to around 6% this year. Now remember, the Fed funds rate is fixed by the Fed. It is not a volatile indicator. Mortgage rates are market driven and react to what the Fed does. The direction of mortgage rates doesn't always go in the same direction of the Fed funds rate. Now you hear in the news a lot about the 30-year conventional mortgage rate as kind of the baseline rate that they compare off of. But what we're seeing are a lot more FHA buyers. FHA mortgage rates have been trending about 0.5% below conventional loans, sitting at around 6.1%, according to Mortgage News Daily. If the same logic comes into play and mortgage rates drop 0.75%, that would put FHA rates in the mid-5s, helping with affordability. FHA has become a super popular loan program because of the lower rates, and they decreased monthly mortgage insurance by 0.3% last May. That makes a huge difference. So make sure you're telling your clients, make sure they're aware of this, and they may be able to afford a little bit more than they think. So I hope you have a wonderful weekend, and we'll see you next week. Bye-bye.